Hello, traders. It is Monday, May 18th, and we're 3 hours into trading. Make that 3.5 hours into trading. Had a massive gap up. What's the market doing? Let's take a look at it, see if we can figure out where the next move is going to be. We've got a relative high here at SPY 294.88. We checked that level last week. As soon as we tried it, we had a massive red candle. That was a bearish engulfing pattern. Looked pretty bad. Then we had another red candle the next day and we had a lower open the next day. So everything looked pretty dang weak by Wednesday morning last week. We sold off during the day. We checked that low right here around the SPY 273 level, and we bounced, closing on the high of the day and forming a bullish candle. Friday, really nice price action closing on the high. That set us up for a gap higher today. And here we are right back at the high again. We're challenging that SPY 295 level, and we've actually been through it. So let's put the 100-day and 200-day moving averages, and let's see where they come into play. You can see that the 100-day moving average is coming into play at SPY 297.48. That is the next resistance level. Obviously, we've got to try and get through SPY 295 today. Bulls would like to see us close above that level, so let's put up the 5-minute chart. You can see this gap up that happened today. As I was telling everyone in the chat room, I said, look, if we're going to get a nasty reversal, one that might fill in most of this gap, it's going to happen in the first 30 to 40 minutes of trading. We're going to see those long red candles closing on their low. We're going to be right in here in the gap already. Didn't happen. So after a half an hour passed, I said the likelihood of us pulling back is getting slimmer and slimmer. And now with this gain holding throughout the first hour of trading, we're likely to drift higher gradually, gradually, gradually. Well, we saw a lot of stocks that just exploded out of the gate. A lot of laggards up 5, 7, 8% right out of the gate. Very, very hard to buy stocks when you have that type of situation. Very hard to get long when we're bumping up right against a major resistance level at SPY 295. I'd mentioned that in the chat room, and I said, look, here's how I'm going to play it. I'm going to be waiting for signs that the market's running out of steam. I am looking to short some stocks in here. I cannot buy because you're seeing stocks inch their way higher, a penny at a time. And at any moment, you could see a 50-cent drop in the stock. I'm not going to play that game on a day trading basis. I'm going to be looking for relative weakness. So that's exactly what I did. I started to short stocks in here. We had the 10P bearish cross there, another cross here. You can see how reliable this indicator is. Look, it's starting to tell us we're in trouble up here. And we could see a little bit of a pullback or at least a sideways compression. So stocks with relative weakness pulled back readily. I had some really nice shorts. I'm going to show you some of the shorts that I played, and then you'll see how we were able to use Option Stalker to find these trades. Now we're getting the pullback in here, and I believe that through the course of the day, you're going to see this 10P indicator come down. It is eventually going to cross down here in negative territory. Probably 2 hours before the close, I would say that we're going to get a cross and we'll probably start to rally up. May even take out that high of the day, may close above SPY 295. Given the strength right now in the market, I would say that it's pretty foregone conclusion that we're going to challenge that 100-day moving average this week into a holiday. Holidays tend to be a little bit bullish, so I'm expecting us to have some good price action. Everyone's super excited right now about global economies opening up, U.S. economies opening up. The Fed chairman yesterday in a 60 Minutes interview said, we have lots that we can do from a Fed standpoint that we have not done yet. We want to see if our current efforts are bearing any fruit. If they're not, and the market needs another little catalyst, we'll be there to help out. Democrats in the House passed a $3 trillion stimulus plan. It's probably not going to go anywhere. It'll be shot down in the Senate. And Republicans right now are saying, look, we've done an awful lot, and we don't even know if it's going to kickstart the economy. So let's wait and see for at least a few weeks. And if we're getting evidence that we need more help, then at that time, we can consider another stimulus plan. Politicians are also worried that there's going to be a lot of waste. and they don't know how effective the PPP stimulus program is going to be. This will give them time to evaluate. The market doesn't care right now. Asset managers are erring on the side of being long because they can't make any money in fixed income. They can't even keep up with the inflation rate. So they're forced into equities. They've got the safety net of the Fed close by. So they're buying the market. The bid is very, very strong. That's why I believe we could challenge those major moving averages sometime this week. And I'll be watching for that 10P indicator to come down this afternoon. I'll be running my searches to look for relative strength, and I will be buying those stocks. One of the stocks that came up early today that I really like, and I'm going to use this as my day trading long, is Visa. So let's take a look at Visa. You can see the gap higher. I saw this gap on a daily chart and I said, okay, I'm going to sell a spread here. I'm going to try and take advantage of some out of the money time decay. And I'm going to put up the daily chart so that you can see that breakout. We had a nice horizontal compression here, earnings after the close right there. Stock was able to hold up pretty well, higher lows. Now we're through the 100-day and 200-day moving averages on a gap higher. So I, this morning, sold the 182.50 180 bullish put spread on Visa expiring on May 29th. So I'm going to have this position on for a little bit less than 2 weeks. And I was able to get 40 cents for that credit, for that spread. So I really like that. I'll repeat the order. So we're selling the Visa May 29th 182.50 puts, and we're buying the 180 puts, and I did that for a 40-cent credit. I don't know if that credit is still there, but if we get a little bit of a pullback in the stock today, that credit might be there. But that's the type of trade that I'm looking for right now. I want to sell premium. I want to have major support. I've got horizontal support lining up right here. I also have major moving averages that I'm leaning on. We're coming into a holiday right now. So Monday is a holiday, but that means that Friday is going to be very, very slow. It also means that Tuesday is going to be very slow. So when you take one day out for a holiday, it takes another two with it. So now we've got 3 extra days of time premium decay. That's why I really like selling that May 29th expiration. The market's trying to push through a relative high right now, so you have to favor the long side. That's why you should be focusing on out of the money bullish put spreads. That's the strategy that you should be using this week. And you can see how Visa's had a nice grind higher right on the high today. I think that's going to bode well for it through the close today. I think it's a stock that you could buy late in the day and hold overnight and still do well on it on a swing basis as well. And you can see the market right now kind of flatlining in here. Very, very compressed trading. And that's been typical for these big gaps up. We get a little float higher, we get a little bit of a pullback, and then you get a bid later in the day, and we take out the high and we keep grinding higher into the close. I think that getting through that resistance level at SPY 294.88 is going to be easy. We should close above SPY 295, and we could even inch a lot closer to that 100-day moving average. So let's take a look and let's go back and see what happened earlier today and why I was really leaning on getting short the market. A lot of these stocks had run higher right out of the gate, and a lot of them are really stodgy stocks like 3M. Before last week, look at that selling pressure right in there. This is a weak stock. All of a sudden, there are buyers. Go, go, go mode. Well, I'm not going to buy a stock that opens on its high of the day and gaps up that much, especially an industrial that could really run into problems, any kind of market weakness, and the rug gets pulled out from underneath you. And then everything just kind of flatlined. There really wasn't a lot going on. I felt it was very, very difficult to make money in longs. So one of my first trades out of the gate today on the short side was CHGG. And we'll take a look at that. You had nice, steady selling throughout the morning. And so what I did was up in here, I set an alert so that if there was a new low of the day, I would get a pop-up alert. And I'm going to put up the SPY so that you can see that relative weakness. And there you've got the market inching higher. What's the stock doing? Down, down, down. So I sold this stock at 63.23. and made 50 cents on that trade. It was a very, very nice short. You could see how it's continued to be an excellent short. We'll go into that daily chart very quickly. And once I saw this candle right here, taking out that prior green candle, taking out that prior day's low, I knew we'd be in good shape on that short, especially with the relative weakness that I had seen. So that was a really nice short, ETSY. You can see here the stock has been super, super powerful. It engulfed this long green candle right here. Let's take a look at that relative weakness. I saw that early in the day. So once I saw that, I took and I drew a horizontal alert line. How did I do that? I clicked alert, then I double clicked on that low right there, that tail, drew a line across, shorted the stock here, bought that back for a 40-cent gain. Really, really nice, quick, easy gains on the downside. You didn't get any kind of price action like this on the upside. Everything was inch higher, and in some cases, inch higher, and then whoosh, the bottom drops out. Didn't have to risk that on the short side as long as the market wasn't going to make any explosive moves higher, and I had stocks that were demonstrating relative weakness. I felt very, very confident that these were going to be excellent shorts. So I shorted Etsy. I made 40 cents on that. I also shorted SIX. And here you can see how the stock had run up very, very nicely. This is a theme park. They're going to have a lot of rules and regulations as far as social distancing requirements and restrictions, and I felt that it was way ahead of itself, so I drew an upward sloping trend line right like that. As soon as that trend line was violated, I got an alert right in this area here. So I shorted that stock at 22.50, and I bought that back for a nice little 20-cent gain on that pullback. SPLK is another really nice one. Saw this relative weakness. You can see how the market's up, and the stock is starting to pull back in here. During this rally, right in here, the gray line is the market. Look what the stock did. Couldn't go anywhere. Could not get through the high of the day. It was compressing right here. If you've got a market rallying like that and the stock cannot advance after a big move like that, that's relative weakness. Draw your upward sloping trend line. Uh-oh, here we go. Long red candle through the upward sloping trend line. This is going to be a good short. Oh, here we go. We take out the low of the day. Easy pickings. That was a nice 40-cent winner. Could have stuck with it a lot longer. Didn't want to because I set passive targets when I'm trading against the market, meaning the market's moving higher and I'm looking for contra trades. TEAM, another short that I traded today. And here you can see, same deal here, market treading higher, higher. Stock not even able to hold on, down on the day, upward sloping trend line right here. Stock breaches that upward sloping trend line on a long red candle. Easy short, 50-cent winner. That's how we do it. Relative strength, relative weakness. If I had told you that I made all my money today on a day when the market's up this much and when it's challenging a new all-time high, you'd think I'm probably crazy. Well, that's where I saw the best trades happening today, and relative weakness was very, very easy to spot. So I clicked on bearish, and then I went into relative weak 30. And right now, if I click through this, you're going to see some symbols in here. Let's click on FIVN. Look at that. Market up, stock down, breaks through this horizontal support level. Whoosh, easy short. Really easy. Nice directional movement. Look at that. Market up, stock compressing, stock is down. Now at this level right here, would I short it? No. The money has already been made on this one. You've got these long red candles, and on most of these, once stocks get through the first 2 hours of trading or so, the intraday volatility really starts to slow down. That's when we make the majority of our money, is in the first 2 or 3 hours of trading. But that's how we find these candidates. If I continue to go through this list, you'd see some other nice candidates. TWLO, that's been a really hot stock, big runner. TDOC, another one. And you can see once it starts to settle in, that selling starts to settle in, draw your upward sloping trend lines, monitor that relative weakness, And so we use alert lines. I click alert and I set the alert. So let me show you how easy it is to set an alert. Let's say that I'm still looking to get in on TDOC today and I feel that any bounce would be shortable. I would click alert. I would pick a candle in the upper part of a bar, like right here, and I double click on it. There I go. There's my horizontal alert line. If the stock rallies above that line, I'm going to get a pop-up alert. And then I'll go, oh, hey, this might be setting up for another short. So then I would probably draw an upward sloping trend line underneath the lows so that when it rolls back over, I've got another alert. These alerts make it so dang easy to trade. So they should be used extensively. Let's see if we've got anything else that looks good. BYND's been a flyer. That's starting to show some weakness in here. Got your nice upward sloping trend line here. You've got it breaking down below that trend line. Lots of relative weakness. The market holding its own here. Stock really losing a lot of gas. So click into the daily chart. You can see we've almost got a bearish engulfing pattern forming here. Needed to get above the tail there, the prior high. Didn't quite do that, but if it had, then you'd actually be engulfing a couple of days along with it. Stock might be getting a little bit tired, not anything to worry about. It still has some horizontal support here around the 125 level, so I still like it on that basis. You can see the market starting to recover a little bit, starting to grind higher. I'm expecting a market rally today. I'm expecting strength throughout the course of the week. So I would not be favoring the short side, except for day trading if we find ourselves in another situation like we did today, where the market makes a monster move higher and then it pretty much compresses in a tight range. Then I'm going to be looking for shorts because I feel that if I'm buying stocks, I'm going to be trying to pick up nickels in front of a steamroller, and any little market pullback and these stocks that have run up so much, they'll have the rug pulled out from under them. I find it much easier to trade from the short side. If you're swing trading, this is a good time to be long. I think there's some excellent plays to sell out of the money bullish put spread. So that's how I would play it. I would play it using Visa. There'll be some other nice candidates also. I had mentioned yesterday that I really liked NVDA for a bullish put spread out of the money. Stock looks fantastic today. However, I thought that I had marked off a criteria in my searches that disqualified stocks that were going to be announcing earnings. I didn't do that. I forgot to do that in the search. And if I hover over the E, you can see that NVIDIA is going to be announcing earnings this week. So don't do that bullish put spread. You would not have been able to get that trade off anyway because you can see that the stock gapped higher. So I think Dropbox was the other one that I liked. And you can see the stock has pulled back a little bit. We're going to be selling the $20, the $21 puts and buying the 2050s. And that trade looks like it might be doable because we've got a little bit of a pullback in the stock. So that's it for today's video. If you like the content, please give it a thumbs up. Let me know that I'm doing something right. And subscribe to the YouTube channel and turn on the notifications. That way you'll know when these new videos are posted. They can come at any time. And I promise you, I'll always have some actionable trades for you, just like Visa. And I'll also make sure to include lots of education so that you know how I'm approaching these trades, what my market outlook is, and how I'm finding them. Thanks so much. We'll see you tomorrow. Thank you for watching this YouTube video. I'm Pete Stolzers and I'm going to keep the trade ideas coming along with lots of education, so make sure to subscribe to the channel and please turn on your notifications so that you never miss another trade. If you like the content, please give it a thumbs up. I've loaded 2 other videos that I think you're really going to enjoy. Stay tuned. We'll see you soon.